Hey, what's good and what's going on? Jim Alfano with the Brooke Team at EXP Realty here, just sharing some news from a Housing Wire article about the interest rates set by our government. Federal Reserve Chairman Jerome Powell emphasized the need to reduce inflation to 2% to benefit the housing market. During a congressional hearing, he also mentioned potential changes to the Basel III Endgame proposal. Powell did not provide a timeline for lowering interest rates, highlighting the balance between inflation and employment. Despite modest progress, Powell stated that the economy isn't yet at a point where rates can be reduced. Most analysts expect a rate reduction in September. Powell noted that the labor market is strong but not overheated. He warned that changing policy too soon or too late could harm the economy. High housing costs and mortgage rates were major concerns during the hearing, with Senator Sherrod Brown criticizing the impact on affordability. Powell agreed that lower inflation would help normalize the housing market. Regarding Basel III, Powell acknowledged criticisms about the increased bank capital requirements. He mentioned ongoing discussions to modify the proposal, with potential final recommendations expected next year. The Mortgage Bankers Association supports revisiting the proposal, citing negative impacts on the housing market and economy. So from my perspective, talking to many people that are looking to buy homes and navigate this market, and talking to them also about their personal life to some degree, because I develop pretty good relationships with my clients and customers, and I would say that the job market is not where it needs to be, even though the numbers might be presenting as strong. I feel that they're kind of not really telling a true narrative of what's going on in reality. And I think that most working class people that work hard for their money, are not in as good of a shape, as good shape as it may appear based on the news headlines. So look, I feel, in my opinion, that the rates being lowered to 2 and 3% to boost the economy when that was done was actually a mistake and contributed to stifling the housing market, because we have many people that are not contributing to the inventory because they have very low interest rates. And why would someone leave a 2.7% rate to get a 7% rate right now, or a 6%? Look, I hope everyone stays strong. I can't control the market, and I only scratch the surface. I'm not a financial person, but I understand the impacts to the housing market on a real level, on a practical level, and on a theoretical level. So you listen, if you have any comments, concerns, I'd love to hear from them. Can put you in touch with one of my mortgage professionals as well to discuss anything concerning these interest rates and what might the impact of federal changes have on the mortgage market, because they're not directly related, but they are definitely indirectly related. All right, guys, I'm going to attach the summary of the article, slightly condensed, to this email as a PDF, and let me know if you have any questions or concerns. And my number is 203-408-1693. Have an awesome day.